But everyone's different, right? Like I find there to be a calm about being in that market. Some people find a calm about it being their own place. One thing that surprised me that I've enjoyed about owning as well is now that I own a place, I don't care about the news about apartment prices going up or down because I live in an apartment. So if the apartment prices go up and I want to move apartments, that's okay because my apartment's worth more. And if apartment prices go down and I want to move, that's okay because apartments are cheaper. And there's definitely like a calm that comes with that. The Aussie Fire podcast is a collaboration between Strong Money Australia and Pearler, Australia's favourite boring long-term investing platform. Join our hosts, Dave from Strong Money Australia and Hayden from Pearler, as they discuss all things financial independence. At Aussie Fire, we're big fans of sharing experiences and talking about money. However, please note that any advice is general and does not consider your financial situation, needs, or objectives. Consider whether it's appropriate for you and, if in doubt, speak to a licensed financial advisor. Hi everyone, welcome back to the Aussie Fire Pod. We're going to be doing another case study episode today with a young listener who's in their late 20s and looking to figure out a decision that they're trying to make when it comes to their first home deposit. It's going to be a really exciting episode today. We're joined by this guest as well as myself and Dave as usual. And before we dig into any kind of case study with guests on this podcast, we always need to make sure we do a really quick disclaimer at the start, just because we're speaking about topics bordering on financial advice. So the information discussed in this podcast is general in nature only. And what that means is it doesn't take into account your personal circumstances, objectives, financial situations, or needs, nor that of the person that we are interviewing today. That means that before you take any advice that you've heard in this podcast, including our listener who's joined us, it's important that you consult a trusted professional such as an accountant, a financial advisor, or equivalent before you make these decisions, because everyone's finances are different and very personal, and it's important we take that into account. But enough of that. Let's actually dig deeper into the episode. We're pretty much today going to be talking about, should you be buying your first home with a 5% deposit or 20% deposit, and exploring that through the first-hand eyes of one of our listeners. So we're joined here today by one of our listeners, Khaing. Thank you so much for joining us today. How are you going?
Thank you. Yes. Thank you so much for having me here today. And it's really amazing to talk to you, both of you. And also I've listening to the podcast a lot, and it's really teach me a lot about investing in ETF. So it's been a lot to sort of came on and discuss with you.
Oh, that's awesome. We're super glad to have you. It's really great to see some of our listeners coming full circle and actually contributing back to the community. And just like, thank you for popping up on camera and, you know, voice audio today and actually sharing some of your story with our listeners. So we obviously want to unpack this question that you've come in with, but it'd be great to hear it in your words as, you know, what exactly is your, what exactly are your circumstances at the moment, and what's the kind of key question that you're facing, or the challenge you're not sure what to decide on?
Yes, I'm in my first time buying a property, and also I've just been started researching about, is it worth owning or renting? I have looked at one of the Excel sheets that you share on the podcast about like rent investing versus buying as well. So I'm trying to figure out, is it the time to owning, and also trying to take advantage of the new first home buyer scheme that the government put out, which is the 5% deposit scheme. I understand that like that if taking on that 5%, that means you had to take on a lot more loan, and also payback would be a lot more. And would it be wiser to just save for 20% and sort of take on lesser loan versus this 5%? But then I'm also afraid of the timing wise, because now that this 5% is released, a lot more first home buyers going to be in the market, and it's of course would drive up the price again as well. So I'm wondering, like, what is your take on how to sort of navigate around this?
Yeah, it's an interesting situation. And again, thanks for joining us on the show and being willing to share this decision that you're facing as you move forward. So there's lots of different angles that we can take to discuss it. But I suppose, as with a lot of things like this, it depends heavily on your personal priorities. So, and the situation itself. So if we can, are you able to share a little bit more about like the context that we're discussing it in, like your financial situation and how things look in that area? Because then that'll give us a good indicator of, okay, how do we make this decision based on the context of of like what we're dealing with, like how you're going with your own savings and things like that. And then that will kind of help determine whether maybe 5% might be a good idea, or maybe it would be better to wait longer to try and get to 20%. And then we can also discuss the risk or the concern you have around how much debt to take on as well, because you mentioned that that's a little bit of a worry for you potentially. And then there's the timing factor as well. So if you don't mind sharing a little bit about your financial situation, then we can much better like unpack the rest of it and try and come up with some solutions here.
Right. Yes. So a bit about my background. So I'm working as a machine learning engineer. I'm earning a little bit about 125K. So for each month, I have about 50% in saving. So right now I have saved up approximately 53K. I have put in another 15K into just this year into the super, because I saw that you could save tax, but it's probably too soon to talk about it now. So I think it's combined. If I could take it out, I will have around 68K. So that's, and then I have another emergency fund that I wouldn't touch in case something's happened. So yeah, that's actually all I have for my side, which I have in my saving, which like I could take out. And also my parent has offered me to help, but I'm not sure if I should take their help and then get it up to 20, like trying to get it up to 20%, or just go with this 5% scheme.
Can I just ask, when you say your parents are offering to help, is that they're offering to help over time save up to that 20% with you? Or is it like right now they could provide the difference between the 5% and 20%, or whatever you don't have up till that 20%?
From what my parent has told me, they could give kind of like a portion that is different, like between what I'm looking at. I think essentially I have two younger sisters as well. I wouldn't want to sort of take more burden on them. So I think realistically, it would be just like myself trying to save up more.
Sure. And so you gravitate more towards that situation of trying to do it yourself?
Yes.
Is that right? You would prefer to do that?
Yes.
Yes. Okay, cool. So that really helps in deciding whether we go 5% or 20%. Because I think where Hayden was going with that line of questioning was, if it was a case of you have the 5% deposit ready now, plus you could also get either a loan or a gift from parents to get to 20%, then that would also be the equivalent where you could purchase now. So in that case, it probably would be better to go for the 20%, since either it would be a gift or you could pay your parents back over time instead of paying the bank back. So that would make sense. And the reason it would make sense is because generally over time, you would expect property prices to go up on average each year. Obviously, it's not going to happen every year, but you would expect it that if you were saving for an extra 2 or 3 or 4 years to get to 20% deposit, that property prices may have gone up in that time. And if you're looking at a property that's maybe $750,000 and it goes up 20% over the next 4 years, that's $150,000 the extra that the property would cost. So for that reason, it does make sense to try and buy sooner rather than later, even if it's going to cost you more under normal circumstances where you would have to pay LMI. But obviously this government scheme really helps with that and avoids that cost essentially. So yeah, I think that if we can frame things in that particular way, then it really helps people see, well, okay, if I'm going to buy, then it makes sense to try and get in sooner rather than later. And then it just becomes a case of, okay, what can I afford? What kind of debt am I comfortable taking on? And that sort of thing. So is there any, you did mention some apprehension about the debt itself, or how much debt you're potentially taking on by using a small deposit. Is that something that really worries you? And if it is it mostly because of the larger number involved in the debt, like just seeing a big mortgage that you have to repay? Or is it something more in line with your monthly expenses? Do you think you would struggle to pay that mortgage? Because I think you said from before, you're actually saving quite a lot each month, which kind of implies that the mortgage would be comfortable for you to be able to repay, even if you used a small deposit.
That's a really good question, because I've been quite paranoid around that question as well. So, like before, I have looked at Hayden Excel sheet about rent investing and then buying, and I was very much hesitate about like, am I really ready to sort of take on that much loan and giving away that much in like trying to sort of fix up things or because I heard that for each month, if you're buying, there's a lot of strata fee, there's a lot of unexpected fixings and stuff that you have to sort of put away the fund toward. And those are not really sort of, you're not getting anything back, like for some of the fixing money. So I'm wondering, like how, for instance, right now I'm thinking about if I take on that, like for 5%, then essentially maybe 50% or more might be going toward paying back, and which leave me little to work with on like daily expenses or even trying to invest in like ETF and stuff. So that's what part of the big concern that I have, where I'm really worried that will I be able to take on that much debt, and also what is the realistic spendings of each month, like repayment and all those other fixing costs and strata fees, etc.
Yeah, Hayden, you can probably speak to this pretty well because you have an apartment, I think, in Sydney that's of a similar, in almost the exact same price bracket that Khaing is looking at. Is that correct?
Yeah, I think it was around 730 was the place I bought, and I think the mortgage repayments at the moment they've changed a few times. I haven't looked because they've gone down because, I think I'd look if they went up, but I think there's something in the realm of like, 3,500 a month or something like that. But obviously, you talk about being able to save this amount of money every month. That seems like more than enough. And that's before you take into account the fact that you're not going to be paying rent somewhere else if you were going to do that. Are you living at home right now, or are you renting right now?
I'm renting. I'm living in a shared space. Yes.
Yeah. So it's like, even if you're in a shared room in a shared space, that's still like $1,000 a month of rent you don't have to pay. Obviously, all the utilities like electricity and stuff, you end up paying regardless of where you live. The strata fee and stuff element is interesting. There's obviously like strata fees, water, and rates. Rates and water end up being, something in the realm of like, I don't know, $2,000 or $3,000 a year for an apartment, something in that ballpark. Usually they're not as big a cost as the strata fees that you deal with. I think generally speaking, in my experience in Sydney, there's kinds of like two broad buckets of strata fees. There's the simple places, which are places like mine, which like they don't have elevators. They don't really have any common areas like gyms and stuff. And they're usually always going to be around about $1,000 a quarter or $4,000 a year or $200 or $300 and something a month. And then there's the more expensive places, which are normally like the nicer modern apartments where they've got pools and elevators and all kinds of stuff, which are like $2,000 a quarter, ballpark figures again. Therefore, you're looking at like $600 a month. So you can look at like strata, water, and rates and stuff, maybe in the ballpark of like $500 a month for simple places, or maybe call it like $800 a month for other places as well. Nicer places. Though, that's kind of the ballpark you're dealing with. But when it comes to the amount you talked about saving, sure, it sounds like you might be on like the slightly more like on the edge end, but I definitely don't think someone with your income and the ability to save that much every month, I'd look at that and say like, wow, you're going to like really struggle to afford it. I'd probably look at it and be like, you want to make sure that if you lose your job, you've got some buffer, like a few months of buffer there, because those repayments would catch up to you quite quickly after a couple of months, I'm sure. But, I don't immediately look at that kind of situation and think, you definitely shouldn't own now. And then even more, I don't think that waiting till 20% deposit in order to reduce kind of the burden of the repayments and stuff would really make much of a difference, because obviously, the higher deposit means the repayments are going to be a little bit lower, but then also, as Dave said, the prices will probably go up over time, realistically, and therefore your repayments will be higher because the loan you require will be bigger. Generally speaking, when I talk to people, the only time that I think a 5% deposit is bad is if they're going to pay lender's mortgage insurance in some cases, because like that can be, not always, but that can be a real inhibitor to the finances making sense, particularly if people are like in that bracket of like, I've got 11%, I just need to save up to 20. But if you're in that kind of first home, I can't remember the name of it, buyer's guarantee, where the government covers it, then I would struggle to think of a lot of reasons why you wouldn't jump in and make the decision if you're kind of committed to it at some point in the next couple of years anyway.
Just to clarify, I think from the numbers that we have written down here from your case study, it sounded like you were spending roughly $1,580 on rent. Is that per month?
Yes.
That's per month, I'm guessing?
Yes.
Sydney's not that bad, Dave, for that to be per week.
Yes. Whoa, I'll never know, mate. And you're saving $4,600 per month and investing $1,100 per month. Is that right?
Yes. It's mainly because for the rent, I'm also afraid that next year they're going to increase it as well because it's already been increased from last year. So I'm actually sharing with 8 other people. So it's like rooms in a house. So from that, I guess it will only go up in the next year. And also I'm wondering, like, is it the time to sort of make I'm not sure if it's a mature decision and I could say that. So yeah, trying to sort of buy my own properties.
Well, because I think one of the main concerns is the debt level potentially. And so I actually think that you have it's a way better situation than maybe you realize, because if you're spending something like $18,000 on rent and you're able to save as much as you are, which is basically over 60 grand a year right now, yes, your housing costs will go up a lot if you buy your own place to live in. I think if we just work on some basic numbers, you're probably going to be spending with mortgage repayments and other stuff, maybe like 45 grand a year, which is a lot. And it's definitely more than you're paying now, but it's only $25,000 ish more than right now, which is a fair bit. But remember, if you're able to save $65,000, then that's a big difference already, right? So you're still going to have plenty of surplus savings left over each month to then either pay down the debt quickly if you would rather do that, or to keep investing in ETFs if you would prefer to do that. So I actually think that based on your income and your relatively low expenses, because it looks like you don't spend that much outside of housing either, then I think you're in a very, very comfortable position to be able to afford the repayments and the upkeep and all of that, and still have a nice amount of buffer left over each month to be able to either pay down debt or invest, or build up a nice big cash pile if you'd like to do that as well for a sense of security, anything like that. So I actually think it looks really promising.
Probably a question, Khaing, that I want to ask is, how much are you still caught up? Like, I think Dave and I have obviously talked about how we think your repayment situation will be fine. Like, we don't think you're going to like struggle to deal with that mortgage, but are you still caught up on just whether or not you want to buy? Like, because you kind of mentioned that a few times, or do you feel quite like committed to buying at this point?
Yes, because I think one of the main reasons that I'm really scared is I never take on any kind of debt before, and also I have a lot of elder, like, I have an auntie that have been asking me to save at least 50% before going into like property buying. So she's essentially mentioning, because this is one of the things that I was really paranoid about, is what if I let go of my jobs, and then I would have like left with all of these things to sort of deal with for each monthly. And I'm not sure if I am able to sort of quickly get back on the train to sort of pay back all those amount. Yes.
Yeah, sure. So I'll try and just talk about some of my own experiences with that, because this is all pretty recent for me, and the fact that you're looking at purchasing a place of a similar price to what I purchased makes it really easy to talk about. In New South Wales right now, there's a stamp duty exemption for first home buyers that tick all the criteria, obviously up to $800,000. I assume you fall into that?
Yes.
Yeah. So my rationale, because I wasn't sure about purchasing when I purchased too, and my rationale with it was, if you really think about it, like the conveyances that I got the lawyers to do the transaction, they cost, I think, $999 or something, so $1,000. And when you sell a place, I mean, Dave would know this a lot better than me, but they'll typically charge somewhere between 2 and 4% sale fees, Dave? Is that ballpark?
About 2%.
2%. Okay. So 2%. So the way you can look at it is like, if you make a purchase and then you kind of realize that it was a bad move, you regret it, it wasn't right for you, it's not the right time for it, and for some reason you just want to get rid of it, and that's ignoring the fact that there are other options out there. For instance, the fact that, if I just take a pause from that, nothing stops you from losing your job, saying, I can't afford this place, I'm going to rent it out and go back to a share house where you'll pay way less in rent proportionally than the mortgage upkeep. rent it out, that'll get you rental income. The loan will be deductible for tax reasons. Like that'll carry itself pretty well for a while. But let's assume you don't want to do that and you just want to offload it. The fact is, because conveyances are like $1,000 and 2% of the purchase price of that property is what, like 15 grand. Yeah, it's like you're basically sitting there being like, the cost of you screwing this up is like, call it 20 grand. And that's like a healthy way to look at it. Because when you look at debt, it can feel really big because you think you're making like a $750,000 decision, or the loan size, a $550,000 decision. But in reality, you're actually kind of making a $20,000 decision is how I think about it, because you're not paying stamp duty anyway. And that's the cost of unwinding it. So I think like that's the figure that's really good to get comfortable with, is to say, what's the cost of this being a mistake? And then that's what's at risk in the worst case. And that's ignoring the fact that you can obviously rent this place out and stuff like that. I have to say, like, the main reason I actually ended up buying a property was because I'd saved up a ton of money and I was looking into debt recycling as a concept. I think without debt recycling, I maybe wouldn't have bought at the time, but I wasn't that keen on, I didn't feel that good owning. Like, I'd rented for 12 years. I was like, I don't care about renting. But one thing I do have to say is that one thing that surprised me that I've enjoyed about owning as well is not the whole it's my place thing. I still think I won't get into that, but I think that's a bit overrated. It's actually the fact that, like, now that I own a place, I don't care about the news about apartment prices going up or down, because I live in an apartment. So if the apartment prices go up and I want to move apartments, that's okay, because my apartment's worth more. And if apartment prices go down and I want to move, that's okay, because apartments are cheaper. And there's definitely like a calm that comes with that. But everyone's different, right? Like, I find there to be a calm about being in that market. Some people find a calm about it being their own place. I know already that, if this makes sense, when I travel, I actually get more anxious owning, because I feel like I have an asset back in Sydney that's mine. And I'm like, oh, what's happening to it? Is it okay? Whereas when I was renting, I was just paying someone like $300 a week for the room. Like, what's the worst that can happen? So everyone's kind of different. But from a financial perspective, if I'm being totally honest, it's not going to be that life-changing. Like, at the current interest rates, buying an apartment is not going to like transform your life and make you retire 10 years earlier rather than waiting a few years. I think if interest rates were way lower, it might be a little bit different. So I don't think you should put a lot of pressure on yourself with this anyway. Like, just because it is, a $700,000 place, interest rates are still a little bit high. If you buy it or don't buy it, like, you'll get through the next couple of years the same broadly. That's my opinion, at least. I don't know if, Dave, you have a different view on that.
No, I agree with pretty much everything you said there. I think the best possible backup plan, I think, is that you move into the place, and then after 6 or 12 months, you think, wow, this is actually a lot more expensive than I thought. Like, like my finances feel like they're a bit under pressure, and I'm not really enjoying this very much just because of that pressure. And maybe you realize, I don't actually care about owning the place I live in. I don't mind renting and sharing with other people. And so at that point, you could then decide there's a few options, I suppose. You could either start renting out rooms in your own place, whether just one room maybe, with maybe a friend or something moves in with you, and then that helps you financially. It takes some of the pressure off. Obviously, there's some tax considerations to take into account there. Or you can potentially just put your place on the market for rent and get a long-term tenant, and then you move out and then you go back to renting. So then you have the less financial pressure again. But the upside to that is you also have the financial security and the peace of mind knowing that you've bought a place. And then so you don't have to worry about, well, in the future, if I want to buy an apartment and the prices go up a lot, then maybe I won't be able to afford, because you've already bought one. So that will give you some sort of peace of mind in the background, I think, to where you can be a renter, but then you still have some long-term security, because you have kind of what Hayden's describing, like a hedge against the market. So you're not going to be worrying about the prices going up or down or whatever, because you have that sense of that option in the future to move into that place if you get sick of renting, or if you just decide you want to be in your own space. And yeah, so you get to take advantage of that ownership and security aspect of it as well. So how do those things kind of balance in your mind? Is there any one factor in particular that's really more appealing that kind of helps you decide which way to go?
I like first of all, thank you so much for laying out all those options and also hearing like Hayden experience really sort of assure me as well. Because I think for myself, as soon as I started researching more and more, I feel like I'm not ready. Is because all those options, and I think it's just at that point I was a little bit of fatigued from all those choices and all those information. It's kind of like information overload. And I would eventually sort of want to start like get into this market as soon as possible as well because eventually I'm in Sydney and I want to sort of own my place and have my own little space to sort of I have been renting for like in a share house for like 6 years now. So yeah, I sort of get up soon to the plan. Really want to sort of live on my own. So yes, I think from what Hayden specified, like having this not looking this big of channels because at first I was really thinking about if I screw this up, then that's gonna be 700K. That's like the big screw up, and then I have to sort of decide whether I have to dump it or if I have to move. Like, how do I sort of deal with this? But like as Hayden mentioned, trying to sort of think of it as a small channel rather than like $100K kind of messed up. That's really helped me to sort of see this problem more clearly and also trying to sort of navigate it a little bit more, like a little bit more calmly.
Yeah, for sure. And this is just another small thing, but I would generally recommend, if you haven't already, just devote like a weekend every couple of months to like a Saturday every couple of months to going to some inspections of places you might want to buy. Because I find this is really useful for me as I do this. I'm doing this at the moment with houses. About once every couple of months, I go and inspect some houses on a Saturday, and I like it because it helps really refine my own headspace as to whether I'm keen or not. Like I've probably done 4 houses inspections over the last year on a Saturday, and I've gone and looked and I've been like, oh, maybe, and then I've thought about it, and then I've thought about it, and then I message Dave and he gives me thoughts. But then I always end up just being like, it just doesn't feel right now. And then at some point it does, and I did that with apartments too. I think I looked like in January, and then I was like, this is too much. And then I looked in March and I was like, this is too much. And I looked in May or something. And then I was like, I think I've seen enough now. And it also makes the decision a lot less stressful because you've seen more stuff. So it's, just good advice for people in general. But yeah, the main thing is just, it's not as big a decision as it sounds. And largely, I think that's because of stamp duty. And in fact, I'm having the same problem right now when I'm looking at houses in Sydney to like buy as an investment property, is like just considering the idea. I honestly think I would have done it by now if it wasn't because of stamp duty. Because stamp duty on a house in Sydney is like $100,000. So that means immediately, if it's a bad idea, you're like, that's a lot of money. That's many, many, many months of work. So I love the stamp duty exemption, and I hope you can eventually take advantage of it because it's so stress-free. And I really mean it. I don't think I would have bought an apartment last year without the stamp duty exemption, for sure. I think I would have just been so annoyed at the cost of it.
That's how much Hayden hates tax.
I actually spoke to a broker and he showed me about how without stamp duty or with stamp duty, how much I'm sort of dodging the bullets and stuff. Yes, I really look at that, and there's a lot that I have to pay if I have to pay the stamp duty.
Yeah, if you add it together between stamp duty and the LMI savings, it's probably something like $50,000. Because if we assume stamp duty is like, 5%, that'd be, 35 grand, let's say. And LMI on a 700K loan is going to be pretty expensive, like probably 15 to 25 grand. I'm not sure. I haven't had an LMI related loan for a long time, but that's like $50,000 right there. So that's a significant potential saving if you were to take advantage of it.
Yes, I think one more thing is about the inspection that Hayden brings up. So trying to sort of do the inspections. So I have actually one for like 12. I think I have to go for a lot more, but so far I just have 1 to 2 of them, and I don't think those sessions really give me much of a good impression either, because it was so crowded. And yes, everybody was sort of and I went to one of the auction floor, and I was like just for the experience I went there, and it was not my level of things. So just went back and I was like, maybe I should rethink this whole decision.
Yeah, it's a lot. I still haven't been to an auction, and if I'm honest, I've never bothered even looking at places that go up for auction because I don't think I can do it yet. It's stressful, the idea of these, like, I've been to auctions, but like I've never been to an auction where I want the place, and just the idea of people just like yelling into the void random chunks of money makes me just like, overwhelmed. But what I would say is like realistically, when you're buying an apartment, like they often talk about, they're like, here's the strata report and here's the contract for sale. The contract for sale is not, they often, the real estates are weird. They tell you here's the contract as if it's something you should read or make sense of when you open it. And it's just like a lot. Realistically, when you get to the point that you're actually really wanting to buy a house, you'll just hand that to the conveyancer or solicitor and you can find them online. I found some random crew in Barangaroo. I Googled them. I found them. I emailed them. They only charge you if the place settles, so you don't have to pay anything unless you actually buy it. There's tons of them out there and they're all doing pretty basic work. So that part I would generally worry about less. The strata reports are sometimes the annoying thing because different organizations will like charge you sometimes for a strata report. The ones where they charge you the full amount for like $300, I just stayed away from them because I was like, I just don't think I care about, like, unless I really desperately want a place. That's just like a lot of money for me to like buy to maybe hope it's okay to then put in a bid to hope I get accepted. But a lot of the strata reports, when they're like 30 or $40, those ones I tried to buy more often. I think I bought 5 of them over a course of months because I was just like, that's just the cost of trying to own a home. And reading through them and sending them to friends. Some people get their like solicitors or their lawyers to look at them. I mostly just sent it to friends of people I knew who'd bought a place before. Nowadays, honestly, ChatGPT and stuff's pretty good at it. And like once you look at a few, you kind of know what the big red flags are, right? Which they're actually not too bad. But I'd say honestly, like reading strata reports is, for me at least, probably like at least a third of the pain of buying. The other third's all the inspections and stuff. Out of curiosity, have you got pre-approval from a bank for a loan yet?
Oh, not just yet. I've talked to a broker and he showed me like which one of them is looking good for my case. So I decided to go with Macquarie just because they just say that they're and also yes. And also I have listened to an episode with like you and Dave talking about this debt recycling, where like trying to sort of with the house that you're living in, trying to sort of debt recycle your home loans and stuff. So it's really got me interested in those featured as well. And I think it was really good that you also bring up the strata thing because but that was one of the biggest concern that is waiting on my mind as well. Whether if I get into one apartment and that especially have a big, like if it is have a big construction issue and it doesn't really show up in the report, and do you sort of have to get your own inspection company for the buildings, or is it just good to trust with like whatever they have?
Yeah, so I mean, just to be clear, I bought one apartment. So this is just the thoughts of a random 32-year-old who's bought one apartment. So for everyone listening, don't take it like that. What I just say about that as someone who felt those anxieties is like, I had a very simple approach with stuff, which is that if it's a very new build, like a year or two old, typically in a weird kind of way, they can nearly be safer because of the fact that they're like covered by the 7 years of insurance or whatever. I can't remember the specifics of that, but like the very, very new builds, if they uncover problems, typically the builders will have to fix it. If the place is quite old, and in particular, if it's made out of brick, usually they're pretty safe. Like the place I bought was built in like 2002 or something, and it's a brick apartment building. So they're kind of like the two bookends. The weird places that are the scariest usually are the ones that were kind of built more than 5 or 7 years ago that are like that new type of bulk construction. They're the ones you tend to see all of the weird things happening. And just on that, usually with these places, those issues are known, and they're usually like in the strata report if they're kind of like a notable issue, like someone would be like, it's going to cost each owner like thousands of dollars a year. Or if they're like really bad, then it's usually lodged with the government and it's actually in the real estate listing. Like for instance, if you look at any apartments in Canterbury, in New South Wales on Domain, there's like a whole bunch right on the river. You'll see a ton of those if you actually go to the Domain link, say at the bottom, like this apartment has like major defects. So like if it's actually lodged in New South Wales with the state as being a major defect, real estates are actually required to like state that just even in the listing. And, those places you can, I could talk about that for a few minutes, but you would just normally stay away from them. But what I'd say is like most of the time there's signals in the strata report, very clear signals. On the odd chance that there's not clear signals, something may come up, but it's like, unless it's that type of build, it's usually not catastrophic. For instance, in my strata unit, a lot of the tiles in the common areas weren't put down properly years ago. And in summer, they all kind of expand and crack, and then water gets under them and it's causing some stuff. And that's a very serious like thing to fix. Like they're quoting like $200,000 for it across like 50 units or something, which is like $4,000 a unit. Now that's a lot of money, to be clear, but that's what I would call like, that's like a bad thing to discover. But I don't think you need to be super worried about like just getting surprised out of nowhere. No one expected it with like I've seen some stratas where like every owner's having to pay 50 grand a year for 4 years because like the building is just cooked, you know, like it's
like structurally unsound.
Yeah, I think the usual things I've been told were like, there's going to be so many people that know more about me than this that are listening to this, clawing their eyes out. But the usual things I've been told are just like, you never want a building that's like steel framed or in that kind of, you know, post-brick period that's like 10 or 15 years ago. And whenever you see anything to do with water damage, water's like a really scary thing to read about in those kinds of buildings. But if you're like me and you find this whole conversation overwhelming and you just like I find it overwhelming and I couldn't even be bothered trying to actually learn more than I do about it now because I have better things to do in my life, then the really classic good piece of advice is just like go and find a brick type apartment because they'll just probably be fine.
An older one.
Yeah.
Yeah, the older style apartments tend to not have, you know, they have other maintenance issues, like longer term maintenance issues, but they don't have like the major sort of defect issues that Hayden's talking about. That's been a bit more common like in the last 20 years or so. So that's what I would do to try and avoid the issues with the newer builds.
Yeah, because I'm too tired and busy to get stuck into all the, like, I'm like you. It's like the idea of like, oh, what if there's a defect and then they try and sue the builders, but then the builders are insolvent because there was some, like, it's just too much for my brain. So, you know.
You don't want that stress.
Yeah. I pretty much told myself I wouldn't buy anything that was built after like 2005 or something.
Is there any other angles you think we need to discuss, Khaing? Has that been helpful so far? Are you kind of gravitating one way or the other?
No, that's been really helpful. Thank you so much. Because I've eventually tried to lay out the plans of what is the timeline going to be look like. It just a matters of like, do I really want to take on this much on my own, like pretty soon, or do I have to sort of put up on another year to do it? Or essentially, I'm also very scared about like trying to sort of make a big decision, big jump. It's also a big jump for myself as well. And I think one last question that I want to sort of ask for Hayden is that, because I sort of looked through like how is the like step for this buying looks like, trying to sort of pre-approve and then go for inspections and then secure the things and finally pay the deposits and stuff. How long does it take you sort of when you start buying and then finally sort of secure your own place? And is it exceeded what you have originally planned? Or so like when you start planning, do you expect it to sort of, is it taking longer than you expected? Or is it just sort of go with the flows? And
yeah, so if I was in your shoes, the way I'd think about it is like getting a pre-approval is a great thing because it makes you feel like you're ready. And most pre-approvals will last 90 days. And then a bank typically just wants to do another credit check or get updated pay slips, and then they'll just renew it. So a pre-approval can last a very long time. And if you have a pre-approval, you know you've got the money to do the thing. And that's a good step. And then you pretty much just inspect places until I would say that if you like a place enough and you get the strata report and you look at it and you think this looks fine, then that might be a place that you want to try and buy for a certain price. I think I tried to make 5 offers on places. I didn't want to like bid super competitively. The first 4 places I ever put an offer on, they just said it was too low. And I said, good luck, you know, sounds great. And then eventually the 5th one said to me, they were like, we'd do that price. And then at that point, I pretty much like, you know, went online and found a conveyancer and was like, hey, I want to buy this place ASAP. Can I send you the contract? And they started the conversation. And then there's a bit of back and forth. But usually by that point, it was like the real estate and the owners are happy with the price you want to pay and you want to have that sense from them. And then everyone's assuming they just want this to get done as, you know, reasonably quickly as possible. It's always a little bit stressful. Like, you know, I was getting calls from the real estate being like, they want to sell tomorrow. It's like Thursday and I'm trying to call up or email the conveyancer people being like, the real estate's telling me they want to do it this really, you know, and they'll try and get it done. Like there's always a human element of these things where everyone's always trying to, you know, rush around and stuff. But that's kind of the short story of it. But in summary, it's like there's no harm in getting the pre-approval. It'll make you feel better. You've got the money clearly to buy if you'd like to. You've got the financial situation for that. But it also sounds like you're not in a rush. So it's like you don't have to put pressure on yourself. If a place doesn't feel right, or if a strata report doesn't feel right, it's okay to not do it and just keep waiting. I think you're in a lucky position too, where all the banks and the RBA seem like they're pretty confident that throughout most of 2026, right now at least, we're recording in December, that the interest rates are not going to go down more. And that's a good sign generally. Like one of the reasons I actually kind of bought last year was because I got really nervous that the rate drops were coming and that like the prices might rise a little bit, and they have. But, you know, there's not that much urgency because it's not like the macroeconomic state of the world's going to like probably change that dramatically in 2026, you know, so you don't have to put too much pressure on yourself.
Yeah, just to add on to that, I think as you're looking and browsing and then you start going to different inspections, like Hayden said, and you start to get to know what kind of apartments you like, what kind of apartments you don't like, you can start to you can kind of create a checklist for yourself where you can decide, okay, I like these aspects of this apartment, but I don't like these other things. And then you'll try and find one that kind of ticks all your boxes and is hopefully somewhere around the price that you're happy to pay, and you could negotiate from there. And so that's going to take some time. And remember, in that time, you're also saving like a very healthy amount every month. So you're actually in a stronger position each month that passes. So I wouldn't necessarily worry about, you know, missing out or whatever, because you're saving so much that it's not really going to be a problem. If it takes you a few months to find the apartment that is really the right one for you, then that's fine. That's just another big chunk of savings that you're going to have, which is going to help you as well. So yeah, as to Hayden's point, I wouldn't put too much pressure on yourself, because you're in a good position now to buy, and you'll be in a great position still in another 3 or 6 months if you don't find something until then. That's right.
It's never going to feel perfect either. That's just like the nature of that stuff. Like if you haven't, like I've never met someone who's bought something and was like, that was the perfect place. There was nothing I didn't like about it. It was the exact one I wanted. And I think people romanticize home ownership too, but don't put too much pressure on yourself. Like there's always going to be something that's better. Like I think when I bought this place, I thought it was pretty good for what I was looking for. And then I kept looking at Domain every week after that, being like, did I make the right decision? Is there a better one coming along? And I think it took 4 months of checking every week until I saw the first one that I was like, I think I would have preferred that one. And that's not a bad thing. That was me just curious about what goes on in the world. But that's just how it works too, you know? So there's always that pressure you don't need to put on yourself, because you know this from renting. You've rented for 6 years, you get it. There's no rental you've had that's just been like, wow, this is the place. It's just like, you're like, this ticks the box, this ticks enough boxes, and I'm happy with it.
No, yes, thank you so much. Yeah, thank you so much for like both Dave and Hayden. Every topic that you guys sort of break down, you make it so simple, and like this, I'm really grateful to sort of have this chance to talk with you guys as well. Essentially, bring off a lot of pressure for myself as well, trying to sort of see this as more symbols, and then really, yeah, it's not really that of a complicated matter, but I really have to sort of take time. And it's also, thank you so much, Dave, for trying to sort of remind me that it's okay to be late. It's not that I had to sort of get it done.
Yeah. Well, that's really good. I'm glad you found it helpful. And yeah, it's probably the best type of conversation we can have, where we sit down with someone and we discuss their situation, and then they come away feeling more confident and more empowered about their situation than they were before, because we've been able to share some different perspectives and reflect on it from the outside, because sometimes that's what you need. You need an outside perspective to see things a little bit more clearly, because when you're just focused on your own thing, it's hard to really tell, like objectively, whether you're in a strong position or not a strong position, or you know, when you're weighing up all these different decisions and which paths to go. Sometimes just that outside feedback can be really helpful. So I'm glad we were able to provide that for you today.
Well, that's pretty much all we have time for today on this Aussie Fire Pod case study episode. It's been really lovely being joined by Khaing. They've been an exceptional sport and sharing everything which they volunteered to do. They're not being paid. They're not being forced to. They just actually are here to want to help the community. I think that's always important to remember for our listeners when we have someone join us, is that if they just had a question they wanted answered, they would just email us. But people turn up because they think that their situation and circumstance will be able to help other people as well. So very, very glad to have them here. If you do have any questions you want to shoot to Dave and I generally, you can reach out to us at hello@aussiefirepod.com. Though if you'd like questions to be featured on the podcast, or you'd like to submit your own case study and the kind of question you're battling with in your own situation, just like Khaing, you're able to follow the link, in the show notes, and we will get those and we will reach out to you. If you would like to just chat to us on socials, you can find Dave at Strong Money Australia or myself at Perla. Otherwise, thanks everyone for tuning in. Another big thanks to our guest, and we'll catch you next time.
Thanks for listening, guys. We'll see you in the next episode.
We hope you enjoyed this episode of Aussie Fire. For more FI inspiration, head to perla.com to browse our resources, calculators, and community insights. Perla is an authorized representative, number 1281540 of Sandland Private Wealth, Pty Ltd, with AFSL number 337927. Knowledge is power, especially when investing. So always seek advice and/or check out the relevant disclosure document for any financial product, including the PDS and TMD before deciding. These are available from the product issuer's website. When you invest, your capital is at risk, and past performance is not a reliable indicator of future investment returns.